and welcome back to another True Potential Do More with Your Money podcast. It's episode 199 this week, and to mark the reaching another century of podcasts almost, we're joined by the people this week who were here on the very first podcast nearly 4 years ago. So we're joined by Earl Glasgow, Sir David Harrison, Mark Henderson, and Daniel Harrison, the founders, of course, of True Potential. Welcome, gentlemen.
Thanks, Peter.
Thought it'd be nice to wrap up the year with your perspective. We see you quite regularly on the podcast, Dan, Mark sometimes as well. It's been a while since you've been on, Sir David. I think you were due.
Yep, just got out.
Due another appearance. Well, don't go back in if you can help it for the next half an hour or so. But really interested over the next sort of half an hour to 40 minutes just to get your views on what the year's been like from an investment point of view, but also from the business, what's been happening, and obviously just a bit of an outlook into 2024 as well. So be really good to get your insights. Mark, I want to come to you first though, because once again, markets, as we know, and all of our clients, of course, are invested in our portfolios. Part of being an investor is there are ups, there are downs along the way, but that in there lies the opportunity. What has the year been like then from you, and particularly thinking about maybe the last couple of months or so? Where are we as investors? Where are our clients? Where do they find themselves?
Well, when we look back, Peter, you look back and you think it's been a really volatile year. When we take the portfolio performance, going month by month, we've got 12 months in the year, we've played a draw. In terms of 6 months, the portfolios were showing positive returns, 6 months they weren't. But when you bring it all together, we've had a really strong year end, with November and December being great for both bond and equity markets. So the result of that is that the balanced portfolio from January to date, it's up 6.6%. So you take the volatility, but the positive result is that 6.6% increase. If the clients are invested in portfolios with more equity content, the growth's been even stronger, up to the point where the aggressive portfolio is up over 8% in the year. So this is the message that we've been giving out on the podcasts and talking to clients and advisors, where you say stay in your seat. The reason for that is that anybody who did go into cash, when you take tax into account, all of the portfolios have done better than the cash return in 2023. So the reasons for that are the markets are always looking forward. There's sentiment, strong sentiment now driving returns, that inflation has peaked. The UK figures this morning are great examples. We're at 3.9% inflation in the UK. Funny enough, just below halving the rate for perhaps political reasons, but we'll leave that one for later. It was 4.6% last month, and it peaked in October 22 at 11.1. So you can see inflation's falling. The other thing that's key to this is the notes coming out of the Fed in the US about interest rate cuts. Now, the higher for longer mantra was strong in 2023, but that's now coming away, and they're expecting a 25 basis points cut in interest rates in March of next year, followed by 101.25% for the rest of the year as well. So with that, both equity and bond markets have rallied, which has given us a really good return in November, the third best return in the portfolios that we've had since inception. The other two were post-recovery, the recovery from the 2019 and 2020. And it's...
I think you're allowed to say COVID. David just coughed on the right time.
Yeah.
Well, then I
was trying to avoid saying that because of what we were discussing before. But the COVID recovery period, Peter. So we're pleased with the way things have gone, particularly over the last 2 months, and we're more pleased for the clients, majority of our clients, who weren't affected too much by the volatility that was going on, and are with us now, because the returns in 2023 have been really strong. And it's a good end to the year. It's been a tough year for quite a lot of people, but happily the performance that we've got to close has been really good.
And once again, investors, as we say, have been rewarded for sticking in and keeping their eyes focused on their long-term goals. Just want to bring Earl and Sir David and Daniel into that part of the conversation. And so, it feels a little bit, if you read the newspapers and watch the TV, that it's been a more volatile year than perhaps we've experienced. Is that blown out of proportion? I mean, has it, from your point of view as long-term investors and the founders of this company, you've been around for decades in the industry, has it been a sort of different year, or has it just been a fairly typical year, would you say?
think to pull on the data that maybe Earl and David will give more flavour because they've been at the sharp end of advice as well. But the data Mark shared there was 6 months have been down and 6 months have been up. And what you had probably in that period, Mark, was the 6 months was quite prolonged, where it was down, whereas month on month. But then when you obviously look at that entire 1 year picture, it's up in total. So I think sometimes when you're heaping bad news on top of bad news, it can almost wear you down. We've talked in length, actually, amongst this group in particular, and I know Sir David said some of this in the past, bad news sells as well. You know, good news can sell, but it's not very exciting for an editor out there. They like a bit of scandal, they like a bit of misery. So, you know, if you have 2, 3, 4 months in a row of bad returns, great news if you're a newspaper editor from there. So that'd be my particular view. And I don't know if Sir David or Earl.
I think, Peter, you know, it's about the long term. It doesn't really matter. You know, people will focus in on all the things that go wrong, as Daniel's saying, but these are people's retirements in many, many years to go, and it's staying in the market, as Mark said, and it's time in the market. Now, you could be lucky this year and get in at the right time. The worst thing to do is sell out. Just stay in the long term, and the markets have always, I think, over any 5-year period, beat any other investment asset class. But it feels to me that we've had that much bad news reduce some good news. That's all I've seen. And to me, I think there's a bit of a feel-good coming back to the investment market simply because it's been that long and people, you know, want to get back to not hearing all that stuff.
Do you think maybe some of the news that we've seen, I'll bring you in, Sir David, on this one, that Mark mentioned, the inflation figures come down, you know, interest rates have not gone up. I mean, they're flat leveled off. Maybe there's a prospect that they can begin to come down. We've seen the beginnings of maybe some tax reductions as well. I know this is slightly, you know, boring economic stuff on the news, but actually, as Earl says, it does begin to feed into a general, you know, hopefully a more feel-good factor. Are you optimistic for looking ahead as well? I mean, do you sense a bit of optimism?
Oh yes, you know, it's not just a personal thing. I mean, as a personal thing, I'm optimistic, Peter. But most of the people I speak to are optimistic, and so in line with what Daniel was just saying there, it's hard to get the truth, isn't it? So you can see, I've been abroad quite a lot recently, and we don't have the telly. So, you know, normally when we were living near Hexham there, the telly would come on, you know, you'd have your tea watching it, you were watching the news and whatever, and then it's followed by soaps and things. And what it does, unless you can, it just absolutely drains you of any optimism, because none of the channels are optimistic, all right? And when it is, it's about something that nobody could really care. So it's really stupid things that they're trying to make something out of it. You know, when you talk to people, and I think it was last time we was here, we had a friend trying to buy a house in Newcastle, you know, deprived area, all this stuff. It's hard to buy because they're building a lot of houses. It's hard to buy them because they're moving and all the rest. Yet you then switch the telly on, it says the opposite of that. I'm not saying it's lies. I think that they are, they select things that they want to get across. And what they want to get across, I think, is bad news.
Mm-hmm.
I think the other thing that Mark would be better talking about maybe than I, but there are crises in the world which are caused by politicians. So whenever you get a politician getting involved in things, it always goes bad.
Mm-hmm.
You can't really think, I think, of in the last 30, 40 years where the government's got themselves involved in something, gone too far. And what they didn't do was support businesses at all. So most businesses are creaking now and trying to get back to it. They've got a lot more debt than they had. They had interest rates which are up there. Why are interest rates high? Well, they pay for printing money and all of the other things where money was given away, you know, during COVID, which went on for far too long. Now you've got that same guy is in charge of the country for a little while anyway. He's a little guy to be around for a little while. But once again, you see the same across the pond. Whatever they do, we tend to follow. not because we're slavish. It's because they're a huge, huge population. So it's quite an interesting time, I think.
Yeah.
And spending time abroad, as I have been doing, you see different economies, you see different countries, and there are some differences. There are some differences.
I was going to ask where you go on holiday because you said you haven't got the telly. I mean, up a mountain somewhere, or we can buy you one for Christmas if you need one.
That would be very nice of you, thank you.
Mark,
that would be good. And
just coming back to our clients, Mark, the factors we've been talking about here, clients see that in terms of in their portfolios when they log in. They see the effect of interest rates being cut or prospect of that giving a boost to markets. So clients feel these are economic indicators or economic factors that clients feel for real on their portfolios. Is there such a thing as a Santa rally? Because you mentioned before that we've had a great end of the year or a good end of the year in the markets. I hear this thing about a Santa rally. Is that true?
Well, you can see by the faces around the table, Peter, the question is there a Santa?
Il's nodding.
Yeah, Il says
well, there's no doubt about that.
Yeah. Leprechauns and Santa.
No, I think, Peter, this year certainly not. I think it's been the sentiment which has been building from October onwards, which has led to the increase in the asset values. But the point that we're making before about the investments being well diversified. We're invested in the US. One of the critical factors, well, coming back to that, about 48% of the equity content of the portfolios is US in the US market. It's the exchange rate that affects the returns more than the Santa rally or anything like that. Because we've had really strong returns from the US. But when the dollar weakens and you convert that into sterling, as our clients see, as it being their home currency on the website and on their apps, let's say the US market went up by 5%, you might see a 3 to 3.5% increase in the portfolio element of that because of the exchange rate. Now that can happen in the opposite direction as well, where you get US market returns boosted by the exchange rate coming into sterling. So that's one thing we've got to be careful about. And the managers that we use and our own management team look very, very carefully at hedging to get a smoother return for clients.
And just one thing that strikes me, having done these podcasts with you and Jeff and Chris and your team, is that volatility as an investor is your friend. It's where you find the opportunity to get in the markets, perhaps while things are lower, and buy more units. And looking ahead to 2024, perhaps we've got clients watching this or members of the public watching this thing, and look, I hear what you say, I'm going to invest, I'm going to get in 2024. You shouldn't be afraid of some of these factors that are the pull and the push and the pull of markets, because the key thing is having a long-term goal that you're focused on and sticking to that, and letting the day-to-day let you guys worry about that.
I think it's even simpler. So I think it's even simpler than that, Peter. When I was first learning my trade, the thing was that we sold, as you do, asset-backed investments. And, I remember being trained on this, and people, I think it was even before they had whiteboards, it was, but, when you're investing, when you think about inflation, if you're investing in asset-backed investments, and they are stocks and shares or property versus cash and maybe bonds, right? You're investing in real things. So you're investing in things which are part of inflation. They're putting the cost of their goods up. You've got to share in them. Then therefore, you would hope that that's inflation-proofing your investment. So what we've been trying, we tasked Mark and the team years ago, we wanted to get 7 to 8% over the medium to long term, where everybody's investments are what he sells, right? This is medium to long term aspect. The best way to do that, the best way to hedge against these things, is to be invested in asset-backed investments, not in cash. Cash has a role, right? And of course, when interest rates go up, you get all the gurus and all the newspapers, none of which have got much money, by the way. They don't have much money. They just have an opinion, right? And they give you that opinion. But there's a difference. It's a huge difference when you're using your money. So this team here and this company here is heavily invested in our own funds. So we're taking risks with our money. I don't believe you should ever buy from somebody. I want to get an argument with a whole lot of other people. Actually, I'm not bothered. really.
Go on, David.
No, I will later. Yeah, I'll have an argument with you now. But I think the point being, don't listen to anybody. If somebody says, I recommend this, you say, well, where is your money? Where's your money? That's how you should. That's a test of independence and all the rest of it. It's very easy to be independent and say, you should buy this. But what that person should say is, where is your money? Have you got the same, are you in the same thing? Are you taking the same risk as me? And that de-risks it for the investor. So, if any investor listening should know a lot of my money is in the same funds that his money is in, his money, actually your money and your money. And that's the best safeguard. When you're on a bus, the guy at the front is going to be the first one killed. When you're on an airplane, the pilot's going to be the first one killed. What keeps you safe in an airplane is the pilot. The pilot doesn't want to die. If they want to die, as we've seen before, they fly into a mountain. Don't get on that plane, right? Because you fly into a mountain. Invest in us because we don't fly into mountains. There's too many of us.
Very good strapline line. We should maybe think about adopting that one in 2024.
What I used to say to people, Peter, was, you talk about the plane analogy, investing with marks like getting on a long-haul flight. In any long-haul flight, there'll be a bit of turbulence, which is volatility, but you'll get there in the end if you stay on the plane with the right pilot.
Well, I can't think of a way to stretch that analogy. I'll just ask you the question. Thinking about the industry then, Earl.
Yes.
In 2023, what do you think about that? I mean, has there been turbulence in the financial advice? I'm thinking because we all normally end these podcasts by saying, if you have a question as a client, speak to your advisor. Always, one of the best things you can do. So, but we know it's a shrinking market of advisors. Part of the reason why Daniel, you particularly have grown a team here, that people can call us here if they need advice, ring us up. We've got the team here. What are your sort of thoughts on the industry as a whole this year? We've talked about markets, but I'm interested in your perspective on the industry because that's where you really,
Probably three things, Peter. I think good advisors done a great job to keep people invested, right, and not let them come out to regret it later. I think regulation, we've had, consumer duty was the big thing this year. We have no fear of it.
What does that mean then, just for people watching who perhaps have heard of that or haven't? What is
it's making sure that the value you get for the price you pay, we can add those two things together and make sure it's right for the client. But it's not a problem in this group because we always build and start with the client. Everything. And the number one thing in True Potential for me from 20 years ago when I met David, now 22 years now, is, revolutionise.
Quite a long haul flight you've been on there, isn't it?
It is.
Yeah.
I'm still on board. I don't know how I didn't get ejected, but there you go.
Bit rowdy.
That's right, in flight.
Eat on the gin and tonics and the nuts at the back.
Yeah,
That's normal for everybody just because of one person.
In the Black Bush.
Black Bush.
Yeah. But, the consumer duty, not a problem for us. We want to do the right thing for the client. They pay a certain price, they have to get a certain value. And for me, revolutionising when we set True Potential up was how we delivered wealth management in a modern world. So a client every day wakes up, and if they want to understand that Mark's got 8% growth for them, they can actually see it. It's real. And to me, that's the uniqueness of what we do that's not really available elsewhere. But where we are in the industry at the moment is we have had about 300 new people join this year, and 60% have joined with a goal of making sure their clients are looked after by us and this new team of advisors we're building, because they want to exit. And what I see is momentum gathering, because advisors are, last year we were talking average age 59, so this year average age must be 60, right? So more and more advisors are going to probably come towards us with a view of how can we look after the clients. I think it was a very unique way in doing it. I think the mixture of good technology, bespoke built for the individual client, where everything is in one place and they understand exactly what's going on, but the ability to speak to someone and not just have the technology. That's the key. Yeah. Right? So there's people out there.
It's the definition of hybrid advice that we've always said.
Yes.
The combination of technology complementing the
and I think having those kind of safeguards in place, Peter, are really important because, strange enough, a lot of those clients, I mean, Sir David's talked about this in the past, where a lot of clients got on their savings journey in their 20s as advisors, entered the industry, so they've grew up together effectively. So as the advisor looks to retire into their 60s as well, you're going to have clients who are going to need looking after for 20, 25 years. And if you think about maybe what life in retirement could look like, you may be doing different things in your 60s, into your 70s, and even into your 80s, just because of health or interests and what have you. And being able to guide the client in terms of taking the right type of drawdown at the right time. We've talked about this before. Don't take all your 25% tax-free cash, for instance, unless you really need it. Don't take more drawdown than you need each month unless you really need it as well, is exactly how True Potential and hybrid advice can help those clients throughout their retirement, and then indeed with part of their trust planning and their inheritance planning from there as well. And I think if it's not for firms like True Potential, I met a number of national newspapers last week where I was talking about this, and we'll hopefully see some of this mentioned as we get into January and February onwards. If it's not for a True Potential, who is going to look after this next generation of clients? Not even next generation, this generation of clients. Because it can't be the internet. It can't be internet influencers, I should say. David made a great example before about, everyone's got a great opinion on the news. But, good luck giving advice to somebody in their 70s or something about just pop it into this or pop it into that. Yeah. It won't work. So it's almost, as we think about the industry, a big part of what we spend a lot of our time at True Potential, both now and indeed for the future, is how can we ensure that there's still an industry here to look after those clients and protect them from scammers, to keep the bums in the seats when it comes to being invested, and everything else in between.
Well, let's talk a bit about how we're doing that then at True Potential and what was new this year that we did. We know there's £27 billion of clients' investments with us, which we take great care over, and very much proud that they've chosen to invest with us. You mentioned there the team that we have here who are available to take people's calls and answer their questions. What else have we done from a business side of this year then in terms of things like consumer duty and providing that service to clients?
A number of things. I think if we just start with the team just for a second, Peter, because I probably slipped into this myself. There's a misconception that you need advice all of the time. It has to be a financial advisor. And not always is the answer. In fact, not often. Advice, to use a pure regulatory sense, when you need access to financial advice, I think that happens every so often. Again, if you think about investing and just saving a little often in your 20s into a pension, you probably don't need any more advice for 30, 40 years. Just leave it alone and it will grow. It will double. Is it every 7 years, David? It grows?
If you get 7.1%, doubles every 10 years.
10 years.
10% is every 7.1. That's right. Rule of 71.
Yeah. So imagine the power of just leaving your money, ticking away and doing exactly as Sir David mentions there. What a fantastic place you're in then as a client. But then you hit 65, 66, 67, and you then need to start going into drawdown. That has to be an advice event. But what happens in between all of that? Technically, you don't need an advisor to come and do a review every year. What you probably want to know is my money growing? Is it safe? Is it hitting the goal side of things? And then other queries we get is, I forgot how to log in. Can I use the system? So most of our team at head office are our relationship managers. And what are they doing? They're giving top tips on how to use the system. Sometimes they're helping clients access documents, which they may have lost, and maybe helping them with their tax packs, for instance. And only if they need advice do we unlock the advisor side of things. That's part of what we mean by hybrid advice. The other part of what we mean by hybrid advice is the technology does a lot of that, like heavy lifting up front, because you put yourself in my shoes, or indeed maybe everybody's shoes around here. Often when you want information, you want it there and then. It could be 10 o'clock at night, it could be 5 o'clock in the morning, or what have you. You don't want to ring a call centre and be told your call is very important to us. From there, you want to be able to pick up your own telephone, log in, and find out the exact information about you. So that's a real helpful part of hybrid advice. And what have we been doing with that technology this year? We've rejigged things so the front page is starting to give you more personal information about yourself. We're working on some new graphing options at the moment, which Jamie and I were speaking about on a previous podcast. But we've also started to weave a lot of AI into there. And where does the AI come in handy? It helps answer quicker queries for clients at a time that suits them. And I mentioned this a wee bit a couple of weeks ago on a podcast. This isn't a case of us removing people and removing that personal touch, which is what you see some people do with AI.
Yeah.
From there, far from it. We recognize the importance of treating each of our clients as an individual. From there, that means at times they need to be looked after by a real person as well. But something like AI, for instance, can be really handy if you've lost your password. It's the middle of the night and you want to log into your site. You don't want to wait till 8 a.m. the next day. So that can guide you through there. It can also help in terms of some of your tax reporting, some of your transaction reporting. So we've been trying to do that so it gives clients more information and answers, not just basic questions, but answers more detailed questions at a time and a way which suits.
So it makes you as a 24/7, 365
It does,
business available when the client needs us, which is the right way around.
Yeah, no, it does. And even on that 24/7 side of things, Peter, we've also been, as we do every year, we keep an eye on how our clients are interacting with us, for instance. So what we find is on a weekend, we get less phone calls, but we get more emails. So what we've been doing is having the team on and working on emails. We've been trying Saturday mornings are coming back in January. We're going to give that another go. We've tried that for the last 2 to 3 years. We find a lot of clients don't really call us, but maybe do sit and fire an email away as well. And it's nothing worse. We've all been there. If you send an email on a Friday afternoon or Saturday morning and you don't get a reply to it on Monday or a Tuesday as well. So we've been looking to improve that so our clients don't have to put up with that with true potential.
And just to give people watching an idea of how big we are, we're talking about hundreds of thousands of clients here benefiting from the kind of service you're talking about. There are 20% of the financial advisor industry, 1 in 5 using our service. I mean, this is that tells you the numbers. The people are voting where their feet can come into a company where they can get that kind of service.
We have the privilege of looking after more than 500,000 clients now. Mark, I'll look over. We've got £28.3 billion as of this morning. Sorry for stealing.
It's all right.
Look, repeat it though, because it's a good one in a bit. So that's a lot of people's pensions. It's a lot of people's ISAs. It's a lot of people. And then amongst that, we look after 70,000 clients ourselves in terms of, it's exactly what Earl mentioned before about the hybrid advice. That's where their advisor is retired. So we have the privilege of looking after 70,000 clients without the need for intermediary in the field, so to speak, to look after them, and everything else in between.
I think Danny touched on something quite important there, Peter. When you look at when we set the place up, right, we had the benefit of already working in the industry on a face-to-face basis, and the reason for technology for me was fairly simple. Every piece of paper that we all have is generated off a computer. So it's such a simple thought, right? So I need paper. Well, you need a computer first. So why do you now need paper? Because if you give the client the access to the computer, you give him all that information that the client gets is what somebody might charge him a lot of money to come along and read it to them and hand it out. And you're paying somebody for that. Our advisors aren't like that. Right? The whole idea of giving somebody this or before a computer or a website or whatever isn't because you've got a fetish. It's about what is it that drives the business. And that, once again, is dead simple. Who's got the money? So the client's got the money. He hasn't got the money. You haven't got the money. The advisor doesn't have the money. It's the client. So where we've been different right from the beginning, this didn't used to be very popular, right? So, but now I can say it, is that we designed a system on day one based on a technology base that was right for the client, not for the advisor. Every other business that you see, right, went the other way because they were so enthralled to the advisors, and the advisors say, I'm not using you because you don't do this and you don't do that. And the amounts of times I had arguments with people in the early days and said, my clients don't use computers. My I remember using the phone once and said, who in the audience has got a smartphone? I got all these cheesy, daft answers and things like this, which I wasn't bothered, thing. I said, but here's the thing, your client's got the phone. Right? You haven't got the phone because you're a dinosaur and you're probably not going to join. Why are you here? Why are you here today? You know what we're about. So if you're here just to be smart, be smart. But your client will leave you because everything will be delivered in a way that the client wants it delivered. Not every client lives in a stone cottage in Snowdonia and speaks Welsh. There must be some of them because everybody says they've got one and they want to read to them in Welsh. Why don't you do it in Welsh or Scottish or Gaelic or some other nonsense thing? We've designed it from that. And because we designed that to begin with, it makes everything that we've done since then much easier. The other concept, sorry, because you started to talk.
You drew something down. I was interested what it was.
That's right.
Well, it was a television for you.
No, it was in code so that you couldn't read it. Because you would have stole that idea and tried to make.
So as technology, you need to work on your code because I read that. But carry on.
Technology. He mentioned that. I better write that down. I have to remember that.
Catch on.
When you get politicians and semi-politicians and others messing with what the market dictates, you have a problem. You always have a problem. So assessment of value, consumer duty, or levelling up, or all these things that we know about, if you'd put a trademark on levelling up, would probably now be a rich man, right? It's stolen by politicians, and it's misused. Consumer duty, goodness knows, there'll be something else next year. It just means looking after the client. How does anybody know what value for money is?
You're happy to pay it.
You're happy to pay it, or you compare it with something else. It's only through competition can you bring things down, or otherwise go live in Russia, right? If the government thinks that's the right price, or another body who I'll not mention thinks that's the price for something, it's going to go wrong because they don't know. Right? Our clients are the individual. We said I'm a capitalist. I've got a softer heart than any socialist I've ever met. Right? But I don't believe in big systems. I think there's ample evidence where you've got a big system, a government, a pension scheme, which is not run for the individual. It's run so the individual, without their consent, shares with everybody else, right? But has no control over it. Sooner or later, somebody controls that and makes it into a terrible thing for them. So if you are, say, British Steel pension worker, what happened to your pension? Right? What happened? It was all collected together quite nicely because, you're not capable of thinking about your own finance. Of course, people are capable. What any politician or other nerd thinks is that everybody's stupid apart from them. I've never thought that. Yeah. People are not stupid.
But it's 16 years since you founded the company, the four of you. You've been proven right, vindicated from a lot of what you said.
It didn't send it as a mission. I mean, we said
no, but you have the point.
We set it up to make money.
Point is, it has been proven correct. I was interested, given your experience, and just cast your mind back maybe 16 years if you can think about that. What has perhaps surprised you about where we are in the financial services industry? I'm talking about. You called
this room.
You called a lot of the stuff right. We know that now. We know around technology, but you had visions of things on CFAX, and okay, that evolved, let's say, into what we do now, which is all an app. Has anything surprised you about the financial services industry, compared to when you started the business? Anything taking you by surprise?
I'm mildly surprised that it's still around. Okay, because for years and years and years, recently, AI or something else, or I'm told by people who haven't got advisors, haven't had financial advice, that people don't need it, and that everybody could buy direct from a site and things. I think they can. It's bloody boring, though, isn't it? You've not got something better to do than clot around going, I think I'll buy it. Oh, look at the yield on that. Look, why not just relax and accept that every 10 years, the money you've got can double? And why not accept, rather than try and get 20% growth and whatever, accept that that's phenomenal. It's probably beyond your ability because you're working and enjoying your life. And as long as you put money to one side, the Prudential used to do, it's a great shame that Prudential's not around the way it was. All they ever did was remove money from harm's way, right? Harm's way being the pub, or anything else. It was taken away, and put to one side for them. Did they get astonishing growth? I don't know. But everybody that saved with them, they had money for the weddings, they had money for that. They deposited in a house, they did okay. And it was that discipline. So what surprised me is how easily it has been to get that, how easy people attack that. Surprising, everywhere you go in the world, you see banks. Nice places to go into, apart from here. Right? So they absolutely are atrocious businesses run by atrocious people. And you can leave that on camera. I don't want that. I'd like them to know that because, they've just been a litany of disaster, right? And so what you see is surprising. I'm also surprised at the way that they parachute people in to run firms who've never run a firm, just because to sit properly and talk properly and all the rest of it. Once again, shun those businesses. Don't invest in those businesses.
You've been talking to advisors all your life, right? So has the role of the advisor changed, or just is it the same, just maybe in a different way?
I think it's more disappointment, Peter. Yeah, right. I think all the money that we're managing now, that advisors are looking after, they built many years ago. What this industry needs, whether it's simplified or whatever, I think everybody needs a person to get them going. Yeah. And then the technology takes over. I think we've got it wrong with this thing about service model and stuff like that, because technology can really, really help that. But everybody needs help. It is complex, it is boring. Yeah. So that's why people don't do it. I just watch at home. Watch what I say. It is still more exciting to buy a pair of shoes, right? 100% of what we do now is delivered. We went for a walk at the weekend and we just couldn't wait to get out of the shopping centre, right? It just wasn't a good experience. Maybe that's me, but I think this industry needs a champion company to learn people how to put money out of harm's way. We can do it with technology. When you talk about the volatility, that's when you should be saving regular. You need to just make sacrifices and decide you're not going to spend it all and put it away and don't get access to it. And that will reap rewards and deliver things to you to enable you to do things in 5, 10 or 15 years' time. And I don't see any of that happening now. I fear for the young people coming through, right? Because there was 230,000 colleagues when I started 37 years ago now into 2024. And we competed on the streets against other people to get into the house, to enthuse people to do the right thing, right? Pretty simple products. In 5 or 10 years' time, they got a lump of money, as David said. And that's the one thing about the industry, that we've lost it. I don't know why we've lost it. I think probably because the advisors need paid to do it, right? Because you do have to explain. But at the moment, I think we've got a lot of assets we're looking after, but I don't know where the new assets are coming from. But for me, for the future, if we could leave the industry where we had an upcoming breed of technology, or maybe our team can do it. I know we do a lot on direct debits to get people to put money away and save regular. Well, that would be the thing for me.
Of course, and this would be unsurprising, is that we still don't teach finance in schools compared to 16 years ago or any time. But of course, we are doing some of that now. This is a positive thing that we're doing here at TP. Where, as you know, we've got over 100 of our advisors going into schools across the country to do the very things that you're talking about, to get into young people as they're in that sort of those teenage years, maybe thinking a couple of years ahead to going to university or getting a job, and they're going to have a pay packet. What are they going to do? How much are they going to save? What's the way to save in a way that beats inflation? We're doing it here, aren't we?
Yeah, no, and it's been a bit of a brainchild of yours, Peter, so I'm really going to claim the credit, but it's called On Your Money.
On the money, yeah.
On the money, not on your money. On your bike.
On your bike.
That's true. That's me.
Yeah. No, Peter, I think, you know,
You've got the tips, yeah.
it looks excellent, you know, and I know from the work you've been doing with it, where you've been helping train the advisors and get them up to speed, it's been so well received of them just going into those schools and talking and actually just giving a bit of a voice, and probably going back to what David said before about the banks, and, you know, probably should be a bit of a role of the banks. And if they probably did have the heads switched on properly, they would have done it, because they've got the resources, they've got the foundations to do it. But frankly, they'd rather just take cheap money. You know,
they don't have to compete, Danny. That's why. So you've got a limited amount of banks, too big to fail. That's another nonsense thing, like leveling up or whatever. You're never too big to fail, you know. And if you're going to fail, then they use taxpayers' money to bail them out. Right? We should have let them fail. Yeah. Unfortunately for the shareholders had shares in those banks. But abroad, I mean, Germany had about 150 banks, and we've got about 7 or 8. You know, and everybody knows they've all got their own tales of frustration with the banks, where you really, you know, you can't find one. But I mean, they say, oh, people don't want the banks anymore. Well, they spent billions of pounds keeping them out of your bank. You know, hole in the wall and things like this. Now, I mean, even the hole in the wall is becoming redundant. Our hotels now, we don't accept cash, because the cost of transporting cash, the security and all the rest of you doing it right. We had another hotel where you just used to put the money in a car and just drive to the bank. But the bank in Hexham closed. So you go to West Newcastle, West Denton, to deposit money, because that's how useful the banks are. These aren't small businesses, by the way, right? But their charges aren't small either. They spend more time dressing up their websites to try and be trendy, you know, and that's where they waste the money.
Yeah, and you don't want that. You want your money to be looked after properly.
That's right. Yeah. And the bank charges, I've had enough of this. I've had enough. And I went to a bank, a London-based bank, a private bank, where they did their own IT. They do their own IT. It's never let us down once. When I ring up, I'll transfer you to so-and-so, and here's some, you know, when they're trying to be walky now, you get a different kind of music. The ones who just got, now it's kind of all sorts of trendy stuff coming on. You think, I'm sick of this. I just want to speak to somebody. The person you speak to, it's no good in 5 seconds to get them, but they transfer you. You want to talk to somebody who can sort it out. It's pretty simple, the bank. It's pretty simple what we're asking them to do, is transfer the money or a query. And if they're looking at you and your, which they did, first question I asked them, who does your IT? And they said, we do. We've got our own department. It's in the back of this building. You can come down and have a look at them. We do. I mean, obviously they don't do Outlook. They don't do this. They don't do, they don't build the cloud. But they build something for their clients that works for their clients. And that's it. And it works every time. And the person who talks to you picks the phone up, and they then use the same system to direct the client, which is, I've got to say to them, it's not unique. Somebody else heard it, sort of that before them. But it's amazing how the rest don't. And, we also have a thing here where a system that we build, when we need to upgrade it, we more or less just throw it out the window. We build another one alongside it and replace it with a brand new system. Because the others, now that has an effect on the balance sheet. You're writing off an investment, right? All I said, don't be run by finance people. Be run by people who live and work in the normal world, who know what normal people want. And they then build it. As I said earlier, I built this business to make a profit and to keep as much money as I can, whilst being able to absolutely wipe the competition out by offering their clients, who become our clients, a better deal for the money. And that's it. You can only do that with technology. We're not talking about, seeing financial services a thing. There are only two things. It's that personal thing which gets people started. And it requires persuasion to do that. We've all been there, haven't we? Go on. All right, fine. I finally give in and I buy. Then you don't need to be paying, or you don't need to have that person pop around you. Nothing worse is, we all love our financial advisors. I've been one. I wouldn't want to see them every day. saying, how's it going? How's your money going? Have you got any more money for me? So really, it should only be there when the financial service. Nobody else says that in case somebody says that's awful. It's all about
I think
selling.
of one person who says it.
Well, I can think of 5,000 people who say it. But if you say it in front of the wrong people, they say, oh, that's terrible. People should make their own mind up. Well, I haven't got anything. Until that person comes on, they've made their own mind up. They haven't got anything. And therefore, when they retire, the thing I was going to mention here is this thing about retirement as well. It's meant to be a great time of your life. And it is. But the thing you mustn't do is give away that money too early to into a product or something that says, right, today it's your 65th birthday, now you've got a pension. You know, come on. You know, that's at least 50 years out of date, that whole concept. Even, you know, taking 25%, take a little bit of whatever suits you is what you should be doing. Whatever suits you, and stay invested all the time. You've got plans there that would take you away from, you know, just because it was, say, August. Your plan says, right, we're taking you out of the equity market and we're going to put you into this, that, and the other. Great timing. Spoilt the rest of your life. Right? That's what these mechanistic sort of plans do. What you need to do is stay invested all of your life, keep your money, keep it in your name, keep it in your pension. You keep threatening to get rid of inheritance tax. The next lot coming in won't. The next lot will just get rid of your money, right? And hopefully then we'll go through, you know, we don't know what, I don't want to be too political, but we don't know what Labour are going to do. They're probably less socialistic than the Tories have been after many, many years of trying to, or saying all the right things and doing the opposite. What you've got is somebody says nothing, and it's maybe because he doesn't know what to say. But if they don't say nothing, fine. You just allow the other team to play badly, don't you? And when you're playing against a bad football team, they often just score into their own net. That's all you need. That's all they've had to do since Rishi came along, because he's everybody's friend, apart from mine. I don't think he's my friend. However, I'm being political there.
You never know. I mean,
I
you
think
might get a card. You never know.
just be little card.
Save on the post.
I haven't given them any money, so he'll probably not give us.
Oh.
You know, I mean, I like to give people money, but I've found no reason to give to politicians lately.
I mean, David's talked there about putting the client first and why it's important. Of course, we do that here, but we also put our community first, Daniel. I wanted to just talk to you about another. I mean, just this morning you were handing over presents to a great local charity, Cash for Kids, that really does brighten people's Christmas every year and does a lot throughout the rest of the year as well. Why is that so important to us, and what else have we been doing this year that's caught your eye?
I think probably some of it goes back to what David was just saying there about, say, we haven't given any money to the to that particular party. But overall, between, say, True Potential, between the Harrison Foundation, who's a shareholder in True Potential as well, it's been £950,000 donated to really worthwhile causes this year alone. And that's not money which is easily frittered away. They are causes which actually make a demonstrable difference. Not just local, but abroad as well, because we don't own the monopoly in the North East on the needy causes. There's people out there who do need help, but with the needy causes, what again makes us different, I mentioned demonstrable, it has to actually buy something. We don't support causes which have huge networks of directors and trustees and administrators and what have you. You know, so let's look at Cash for Kids, just the one you've just mentioned there. I don't know what the final count was. It looked more than 200 presents there. I know as a collective, they're into the 20,000 side of things. And that's given 20,000 presents to kids on Christmas Day who maybe didn't get a present that particular, through no fault of their own, from there as well. That's what we mean by actually giving something which goes direct to the cause which is needed.
Oh, so some of the best things we've done over the years is if you like, go to some of these really local youth clubs and charities that you probably, I call them unsung heroes, because probably no one's heard of them, rather than some of these big, massive, national, huge overhead organisations, which maybe in their own way have a big impact. But some of the greatest things we've done is nip up the road and see a couple of people running a youth club on a Tuesday night, which is helping, which loads of kids can go to and have a good time, and make friends and, grow up, frankly, and grow into adults. And I think that's what we're about here, is about the impact.
If you become too intrusive, what you do with a lot of the stuff that you've seen, COVID's a great example. When you start to give people money, but everybody gets it, so everybody gets taxed, everybody gets a gift, it's all the same. You set and train a way of thinking and a way of living which destroys their independence. So you take it out of their parents' hands to look after the children. I was well looked after. I'm as independent as you want, right? But I was loved. If you say a substitute for that, and there's all sorts of things going on. Yeah, when you look at Britain, when you stand back at it, and you look at modern Britain, not the Britain of the 1950s, it's a fantastic place. It's absolutely the best, one of the best places on earth to live and to bring children up. Northeast is no different to that. I hate when they say deprived area. Deprive you of your teeth if you keep that going, right? There's nothing deprived about me, and I'm from that area. And loads of people, same as Northern Ireland, same as Scotland, people have this view. It makes them feel better. They're virtue signalling. They're doing all this to make them. I absolutely hate charities where the biggest output is to the people running the charity. Yeah, okay. Aren't they nice? No, they're not. No, you're not nice. Get out of the way and allow the money to go to the child, or the money, to go into medicine. Hopefully with medicine at the front end of it, not just looking after people who are dying anyway. Make certain they don't get the disease that kills them. So part of the stuff we've done at the foundation almost from the start, and we've been lucky that True Potential has been successful. As a shareholder, Harrison Foundation's had an immense amount of money, tens of millions of pounds that we've put out, and we'll continue to do that. But it's more trying to get at the front end of the problem, not at the back end, because it'll never get better then. It'll never, So, and I don't know anybody who doesn't like to be independent. You're not stressed. You're in control. It's because you're independent. You know where your next pound's coming from. And it is, unfortunately, despite whatever anybody tells you, it is all about money. Because money's the currency that buys you the bread and the roof over your head. So without that, you become despondent. And the more people tell you're despondent, the more you act that way, etc. And you destroy socialism. Yeah, I'm being political.
Well, I actually want to get into that a little bit with you. I want to get your view, because you touched on it there, Britain being a great place to live. You've talked about this before, and I think we should all just sit back from some of the stuff you read on the news and everything else every day. One of the questions I've written down is, where do you think, looking ahead to 2024 I'm talking about, there's going to be some changes in the world and in the UK probably in 2024. Where do you think we are as a country? And don't just say just off France. I mean, where do you think, Britain is, our place in the world, our confidence as a country? I really wanted to get your view on that and looking forward.
I get fed up with people saying we need to know our place in the world. I hate people who say we need to have a grown-up conversation. I'm not really the person. I have to say it's a weakness to have that when somebody says that to me face to face. They might see something happen very childishly and make them swallow those words, right? I am a grown-up. I have grown-up conversations. Right? Britain is a grown-up nation. What it stands for and its legal system, which at times is awful because it's too much power going in some directions, is the best in the world. It's a model for the world. So what do I say for 2024 for the UK? I think we are a dark horse. We punch above our weight, and I don't think it's correct to say we need to know our place. Our place in the world is 5th or 6th largest country in the world in terms of GDP. Why are we not first? Well, we're not big enough. Part of the benefit of being big is the GDP, or the supposed wealth of that country. it's showing. So India looks as though, or Ireland has got an individual GDP higher than the UK. I don't think the average Irish person would recognise that. Right? So a lot of these league tables are strange because they've got some big businesses there and they've got a tiny population. Right? With us, we've got some big businesses. We've got a medium-sized population. We're every bit as good as people on the continent. Germany is bigger than us, but they've got a much bigger population. France is smaller than us and less wealthy than us. They've got a smaller population. So is Spain. All decent places to live. Italy, I spend some of the time there now. Great places, great people, smaller population, smaller wealth. We have a big population on a tiny island. And people need to remember that. We're not tiny. We're big. We've got a big population. We are well educated. We speak English. It's quite important because worldwide the business language is English. Thank goodness. More people speak English than speak Italian in Florence. Thank goodness. Otherwise,
how's the Italian coming along, by the way?
oh, it's really, really good. I don't want to show off.
Please do.
No. It's no. It's not what I do.
Yeah.
Molto bene.
Oh.
But anyway, that's it.
Yeah.
Gracias. No, that's the wrong one. Wrong country.
Yeah. Close though.
I actually they've got like, I've had 7 speeding tickets.
Only 7. We're all surprised it's only 7.
I had 7 speeding tickets, and they've got toll booths everywhere. And the thing is, every now and then you see a free one. Well, I thought, just go through there, because it's busy there, just shot through. But you've got to get out at the other end. And then to get out, you have to speak to somebody who, because you don't have a ticket, so you're stuck, and you've got angry Italians behind you, waving their hands and things like this and whatever. So this person was speaking to us in Italian, and of course, I didn't really understand.
Did you say you were taking the pizza? Was that,
No, I didn't say that. No, because that would just been wouldn't have even been funny. Of course, it would be funny to you. So I actually, under pressure, and the grandchildren in the back was, speak English like that. I meant to say I am English, but I can speak English like that, and they could. And where did it come on? And we had a little conversation about where it was, because I didn't know where it was, where I could just sneak through. But English is useful like that because most people have to learn to speak it, because there are Americans, there are Brits, there are all sorts of people who can only speak that language. And I have no problem speaking in English in Florence. Outside of there, by the way, Italians don't learn English, like the Dutch. They sometimes repeat themselves, thus double Dutch.
Well, I think you've said it before on the podcast and a lot over the years that Britain's a great country, and I think you're right. And I think we should hear that more often. Just to finish off, I wanted to ask you, as business leaders that proudly look after 500,000 people's investments and their future in terms of their finance. Give me one thing that would be top of your Christmas list. Then, what would you be looking? What would you like as a business leader? Whether it's perhaps something from a government, a regulator, or just even what you're hoping for a new year. What is it you're looking for as business leaders, Dan? What would be your top of your list? Or just even what you're hoping for next year. What are you looking forward to?
I'm hopefully looking for less bad news, but what am I looking for? I'd like less governance, less regulation, full stop, from UK government. And that is a forlorn hope. And not even a forlorn hope, because at least I could charge in the fort first and maybe win a medal.
Even you saying it, you might get regulated. That's how bad it is.
Yeah. Because, I think everywhere you look and you speak, I'm not just talking about financial services as an industry here. You speak to any business leader, the UK is a hard place to do business at the moment. I'll get slightly political. You look past the last 12 years of Tory rule, maybe it's 13 now. What a waste of time it's been. Every promise of a business-friendly political organisation has been wrong. We pay more tax, we are regulated more, we have more governance in place than we did 12, 13 years ago, certainly than 16 years ago when we set True Potential up from there. And it's not double Dutch, double trouble here, because as a business owner, I'm paying more tax. As an individual, I'm paying more tax as well. So it's a squeeze from both sides as well. I have had to listen to the party waiting in the wings very recently, and I've heard some of their policies. I'll not get into it too much there, but as a chief executive of a business, there was nothing there which made me sit up and think, I can't wait for this party to get in charge. So I know you're always meant to finish on a high from there. So how do I finish on a high? You ignore that and you do what you do really well. And our true potential, it is finding top-class financial advisors with brilliant clients who want to save and want to take control of their own finances by saving into pensions, into ISAs, and then looking after it for the long term. So it sounds very boring when you say, what are you going to do next year? More of the same.
Well, and what you're looking forward to, perhaps, is a little bit less people in your face telling you what you need to do.
No, I'm just looking forward to finding another 100,000, 500,000 clients and helping them, to use a strapline in the back there, help those clients do more with the money. Because I know we can do that. I can't control the political arena. I can't control the UK side of things. And if you spend too long, you start doing what I'm doing there, which is moaning. So instead of moaning, stick to what we do well.
And Mark, coming to you, what's top of your Christmas list then, as a business owner, business leader?
Guess it's aspirational, Peter. I'd like simplification. I'd like short-term savings, long-term savings, simplified, so that the client who's investing with us has got very, very straightforward products which will do the job for them when they need it to be done. Most of our clients are looking for a happy retirement with the optionality to live their life the way they want to, having saved up to that point where they're drawing on their pensions. And even with pension freedoms, that area of investment is still far too complicated by rules and regulation. So if we could clear that out, it would mean the products and financial services would essentially be simpler to understand. And that's not dumbing it down at all. But to get people engaged in it, Peter, we've just got to get rid of the complexity. Now, whether that comes following the election, I very much doubt it. So that's number one wish. Number two would be the politicians just get out the way, and we don't see them influencing what's happening in financial services after they've simplified it for me.
Coming to you, Will.
Keep doing what we're doing, because we're doing the right thing. Clients are giving us 4.9, out of 5 for Trustpilot. 99% of the clients stick with us, even in a year we've had. And just listen to the client. Listen to the client, do the right thing for the client, and just keep focusing on the client, and then everything else falls into place. Well said. Thank you.
Sir David, come on.
I don't speak down to say that. I was going to say that.
Yeah.
Anyway.
What's top of your Christmas list?
Well, I think getting rid of tax, corporation tax would be good. I think showing people the difference between a highly taxed country and a lower tax country. Well, we've got a model just not far north of here where they put the taxes up, right, where everything that you're measuring up there is worse than it was when they took over health, everything, drugs, the whole thing. No matter how much money you give the government, they cannot spend it wisely because the people running it aren't wise people. I would agree. I have to agree, however, from the point of view of the client, what Daniel and Mark and Earl have touched on, Peter, all of this has to be paid for. So when somebody gives you a 6,000-page rule book and refers to it, right, anybody can build that rule book. It's first of all mad, right? I'm not saying that regulator is mad, but it has some mad things. And each time you do that, right, you say, I've got to get 10 out of 10. They'll not get 10 out of 10, they get 9 out of 10. You never win. And then what then happens is you build another 12 things to do, then sure they can get 10 out of 10, but now you've got 22 things. You just can't keep up. There's been a 44% increase in the amount of lawyers since 1990, but it's regulatory lawyers. because you have to use a lawyer to explain this. Well, if you've gone to a lawyer before, some of them are very good, but they take a long time explaining because they're paid by the minute. And if you then get a rule book made by a lawyer, you get another lawyer saying, that's not good, you can do this. And we have built a business built on subtraction, getting rid of things rather than adding things, getting rid of things so you bring it back to the bare bones. So if 2024, if we could have less regulation overall, it's highly unlikely, as you say, there's too many people are employed to have it.
Yeah.
And unless you're careful, you'll end up with a state where most people are working for the state or working for big corporations or whatever. And then you don't get the vote. The vote, So that's what's happened north of the border. You replaced one socialist party with another one, and everybody thinks, well, I better vote for them because my universal credit or my whatever. And that's...
Yeah.
So I think we don't have to go that way. But I think what I would love is the hidden majority, the silent majority of British people get a chance to vote every few years. We might get a shock. I don't think it's anything. I think the present bunch of squandered chances. We don't know whether they did well with COVID or not. We can now see when a daft bloody inquiry about just raking it up again and again. The whole purpose of this is find if you were to have it again, what would you do? And you certainly wouldn't do what they've done there, but they didn't know that one was.
No.
If you're that person trying to, you're getting advice from people who are dry, scientist kind of based. Same as us trying to run a business, where finance will tell you this is on a spreadsheet. It's going to happen. It never does. Never, ever, ever does, because they don't know. They'll tell you they don't know. And I think those scientists were saying, we really don't know. And they got caught.
Yeah.
Right. And we're now trying to, but they're raking the coals over on that, which is just a huge waste of time and energy. But it gives the newspaper something to, it becomes a scandal rather than.
Well, it seems to be focused on who to blame rather than what to learn.
Of course.
Where it's going wrong.
I don't think. So therefore, was that optimistic? I'm always optimistic. I think, as I say, we whatever we do, we will come out. This business will come out on top, and we as a country will come out on top. You have to climb through a whole load of red tape. If we could get rid of the red tape.
Well, I think that's what you're all saying.
And the point I should have made, when I was talking about the red tape, because it all has to be paid for.
Yeah.
It costs money. Those lawyers, as Dave rightly says, costs money.
We could drop our prices. Well, we have to make a profit, otherwise,
you can't use some of the stuff that we've been talking about.
Well,
any of this.
Well, we have the responsibility in the next 30, 40, 50 years of looking after people's money. That's the people we've already got. Never mind new people. So you have to make a profit. You've got to be. We employ about 600 people in the northeast and Ulster. We've got a responsibility. That's not what we do it for. We do it to make a profit. Right? You do it to make a profit. And nobody dares say that. I've just said it. I'm only here to make a profit. But I'm not. I'm doing good things, I think, to make a profit. Mm-hmm. Right? I could do a lot more good things if the regulator got off everybody's back. I don't mean financial services. I just mean in general. Because the lie that was Brexit, because of Brexit, we've got all this red tape. That's not true. We are great at inventing red tape ourselves. A certain type of character. If your job relies upon you making up rules, you'll make up rules. Rules are another word for red tape, regulation. Okay. None of it makes sense, and you need a strong leader, which you thought you had in Boris, to come in and do it. I don't know whether he got something wrong with COVID or whatever. We went all to hell. He's always open. I mean, I haven't met anybody who there's people taken in by him. He is what he was, wasn't he? He's just big gobshite of a bloke. We'll do this, we'll do that. And sometimes you need that. Of course you need that. What you got now is a mouse. And sometimes you need that, but never in the front. Way out the back. That's just you do that. You. And then you've got the silent man coming in, big drab grey face, going, what's going on? Called Starmer, who's a lawyer. That can't be good.
Yeah.
Can't be good. I think in one of Shakespeare's plays, they said, what are we going to do next? And somebody said, first of all, we'll kill all the lawyers. It's in the Shakespeare play. I should have looked that up then. I would have appeared more intelligent than I really am. Hard, but possible.
Well, I think the sort of summary of what you're all saying is more simplicity next year so that we can continue to do what we do, which is look after our clients, which is the most important thing to us. Yeah. Well, I think that's a very good way to finish off, and very well said as well. So look, episode 199. I don't know about you, but I feel like I've got a bit of an itch that I can't. I feel like we needed to do 200 before the end of the year. I don't think I can enjoy me.
I'm not doing that
with
anymore.
199 hanging there.
I think we've done about 2.
Can we not come back and do one tomorrow just to get 200 out of the way? I feel like
You've got an itch for a while. Let's spare an hour.
doing one then.
Yeah.
2 for the price of one.
Maybe this is
Absolutely. Leveling up. It's all about money.
Yeah.
On your bike.
On your
Bog off. Just buy one, get one free. But we will bog off now because it is time to do that. So thank you, Earl. Thank you, Mark and Daniel and Sir David. Don't leave it so long next time. Let's get you back on.
It just depends. You've got to pay tax now.
Well, not to be on the podcast, you don't. We wouldn't charge it. Or maybe we should. It could be an idea. So look, thank you very much for being on today. Thank you as well, of course, for joining us for the 199th episode and for all of the ones before that as well.
And how about the team in the corner?
Well, they're an ever-present. You can't see them, but we can, and they keep the show on the road. So thank you to you as well. And we'll look forward to seeing you. Whatever you're doing over the next few weeks with your family, enjoy yourselves and enjoy the break. Join us again in January for episode 200. So until then, we wish you a very Merry Christmas.
Bye-bye.
Bye-bye.